So welcome everyone. Thank you all for being here. Just a couple of quick Zoom mentions. If you wouldn't mind keeping yourself on mute unless you're talking, that would just help cut down on background noise. You're welcome to jump in at any point to cut me off or interrupt me with questions or thoughts. Otherwise, you can use the chat feature if you want to put in a question and we can address it when it makes sense. So excited to be with you today. I am very hopeful and confident that we'll keep the presentation part to about 50 minutes or 55 minutes. And so we'll have a little bit of padding if there's questions or discussion to have afterwards, or we can let you all out to enjoy your evening, whatever makes sense. So my hope is that we have a little bit of a discussion through this. I tend to get really tired of myself talking. So if you all want to jump in with your own experiences, your own questions, perspectives, please feel free. While I will be this quote unquote trainer today, I am not the expert. And there are many, many, many different ways to approach all this work in boards of directors and nonprofits. So please, we'll learn from each other as well. We're going to go through just a brief introduction on the basic idea of what a board is and why it exists. We'll get into growth cycles and life cycles of organizations and learn how that affects what boards do and should be doing. Talk a little bit about both personal responsibilities of board members themselves and then responsibilities of boards as a group and the organizations to boards. That will entail a bit of talk about key ingredients. This will be a great section where if you all have thoughts, perspectives on what additional key ingredients we all need to be thinking about, I'll also be learning from you all. And then we're going to wrap up with everyone's favorite topic of financials and really do sort of a broad 30,000 level foot training, quick and dirty training on nonprofit accounting and financial statements. And part of the reason we're going to spend a decent chunk of time on those is because as board members, this is one of your primary responsibilities and legal responsibilities is to be in a place where you understand the financial health of your organization and can ask good questions of your staff or of your volunteers to make sure that you understand where the organization is, where it's headed. And then we'll end with some board reporting and go from there. So forgive my really basic graphic here, but I really want to start with this question of what is a board? At the end of the day, we'll talk a little bit about the legal structures and what makes a board legally, but what I want to really focus on at the moment is this conceptual framework which says organizations and nonprofits, for a variety of reasons, must and should have their community at their core. And when I say community, I mean those that you serve, those that you seek to serve. So for the BV Chamber, maybe it's the business members. For your PTO, it's, depending on your perspective, it's the parents or the kids or the teachers, school, right? Really interesting definitions there. And many blessings, it's kids. And for Guidestone, it's a whole spectrum of folks that access your programming and food. But we really need to understand who is our community and how are we centering them in our work, because legally speaking, a nonprofit doesn't have an owner. The closest thing is the board of directors, and yet the board is responsible to and accountable to the community. And so in this graphic, I tried to represent the fact that community should be at our center. The next layer of accountability and of ownership, so to speak, goes to the board of directors. And then from there, we get into staff, volunteers, and those actually implementing work. And so it's a really important frame of reference to always keep in mind that the board is accountable to the community. Many different staffing charts and organizational charts have the board at the top and everyone else below. And in many ways that's accurate, but I think it sort of divorces a board from a framework of thinking about how they're accountable to community. And I was just reading a report this morning about a national survey of nonprofits, and literally over half of the executive directors and board chairs felt that their boards did not represent or listen to their community enough. And that's really sad, right? That's really disturbing. If we as nonprofits are not listening to, representing, and being accountable to our communities, to those we seek to serve, then we have to ask questions like, are we really serving them? And so I really want to hammer this home, and we'll talk a little bit more about this throughout the presentation. But just as a frame of reference, always try to center community and ask yourselves as a board, how are we representing, speaking for, listening to our community? Another really high level framing piece for us today is grounding in the why, I call it, and it's not unique to me, I'm stealing that from others, but the why is so important. And we'll talk about this throughout some of the key ingredients and responsibility pieces. But it comes back to defining what is our vision, mission, and values as an organization. How are those being responsive to our community and being informed by our community? And I want to just level set with these terms real briefly. And I use a roadmap analogy just because it's the easiest thing to think about. If we think about our vision and our vision statement, this is a bold statement, usually one sentence, that describes the world as if you had been successful. It is the destination, it is where you are going, right? It's when you're plugging in the GPS, I'm going to Denver, I'm going to wherever. That's your vision. What does the world look like if you're successful? The mission statement is more of what route you're taking to get there. And so your mission statement is often 2 to 3 sentences. It is concise, but it should identify the top 2 or 3 strategies that you're using that you think is the best way to get to that destination. And obviously we can keep in mind that there are many, many different routes to a singular destination. Maybe our vision is a transformed and vibrant, resilient Chaffee County, right? It's a very bold statement, not very measurable, but that's where we want to go. Our strategy as an organization might say we're going to use supporting small businesses, providing programming and training to entrepreneurs, and developing community leaders as our top 3 strategies, right? That's your mission statement. That's how you're going to achieve that vision. And then finally, the values are the guardrails that keep us on the route we've chosen. And we cannot function as a high functioning organization and as a organization that has deep impact without all 3 of these elements, and without having all 3 of these elements actively informing our work on a day-to-day basis and being sort of living elements. I'm happy to talk more about these either now or as we move forward if you'd like. But really, I want to focus on this idea that the why is where everything starts. And these are the 3 most important elements that will guide our organization. And that as board members, it's your responsibility to truly know. And if you don't have all 3 of these, it's a great place to start. What's our vision statement? What's our mission statement? What are our values? Get those defined. We think about life cycles of organizations, and this is called nonprofit life cycles, but I think we all kind of instinctively know that this applies across the board to really anything, whether it's a for-profit entity, a nonprofit, government entities. Often, right, we see that there are stages, identifiable stages of life cycles in entities. And depending on where your organization is in this life cycle, might determine and should determine how your board functions, what it does, what it thinks about. And I will say that while this graph shows a nice singular black line with arrows, we all also instinctively know that it's not this simple, right? So this is really meant to be more metaphorical than trying to define how it actually is. But we can think about startup stage, right? Day 1 of an organization, whether this is a brand new entity or whether you're starting a brand new sort of chapter in your organization, this startup phase boards are usually working boards. They're usually boards that really blend the line, and maybe there's no line between a board and a staff member. The board members are often doing functions that drive the day-to-day work and implementation of the vision. And boards in the startup phase really need to be tuned in and tapped into what's happening every single day at the organization so that they can contribute to making it grow. But as we start to grow, our organizations grow and get into adolescence, maturity, our boards, rightly so, start to delegate that day-to-day management and execution of programming to staff members or to primary volunteers. And the board members themselves need to start thinking more in terms of governance, of strategy, of direction, of vision. And so the work of a board of a adolescent organization or a mature organization will often be asking questions less in tune with how many people did we serve yesterday, and more in tune with where do we want to be as an organization in 18 months? How do we make the most meaningful use of our reserves, or how do we build reserves? So these are some of the key distinctions. Another term for this might be called policy governance, right? Where the board really starts to focus on setting policy so that staff or primary volunteers can implement, and that policy is what guides. So the board members are no longer deciding how we're going to spend $100. They're deciding how that decision gets to be made by staff, and then staff get to decide, right? So it's this distinction over time. And a really important note is that you see there's sort of a stagnation and decline on this life cycle, right? And we all instinctively know this. If we don't evolve, if we don't grow, if we don't change, we will reach a point at which we become less relevant. Maybe our community is changing. Maybe the needs are changing. And if we haven't been changing, or if we're not changing quickly enough to respond to those, we'll enter a time when maybe our revenues start to level off. Maybe our participation in our program starts to dip. And the function of the board is really to try to find out what are the indicators we want to look at to see whether or not we're entering stagnation and decline. So as a board, that question of what information do I need to understand my organization's health in a holistic sense is one of your primary jobs, right? And if you don't feel like you have that information, ask for it. Define what you want to know and work with your staff or work with your primary volunteers to be able to give you that information on a regular basis. And so as a board, it's your job, oh my goodness, our revenue is stagnated for 3 years in a row, or we're scraping by for every dollar, or we're taking 2 years to raise what used to take us 6 months. How do you enter a period of renewal? How do you go back to your mission? And how do you say, how are we going to respond back to our community in new ways that meet their needs today? And then re-enter a stage of growth. So this life cycle is really helpful from a conceptual standpoint to say that, to get yourself to ask, where is my organization on this? How do I know that? And how do I define what I need to know to anticipate the next stage that we're entering? Does that all make sense and resonate? And I appreciate Amber, you getting back to Susan. Yes, I will share these slides. Anyone want to jump in on this slide here or add thoughts or questions? So let's jump into responsibilities. Being a board member is not only carries with it sort of heartstrings responsibilities. You're involved because you care about the mission in the organization, which we'll talk more about here in a moment. But it is a legal role that you are filling as a fiduciary for your organization. And that legal role comes with legal responsibilities, potential risks to you as a board member. And therefore, we often talk about the responsibilities of a board member in 3 primary duties, so to speak: duty of care, duty of loyalty, and duty of obedience. And these are talked about in different ways, but the idea here is that duty of care speaks to how are we using the resources we have, and how are we ensuring that the organization has enough resources to do what we want to do, to meet our mission, to serve our community. Duty of loyalty goes back to the why. Are we being loyal to our mission? If our mission says we're going to invest in entrepreneurial incubation and we haven't done that in 5 years, something's wrong. As a board member, it's your duty to say, well, do we need to change our mission, or do we need to change our programming? Because there's a mismatch here. And then the other aspect of duty of loyalty is avoiding any conflicts of interest and or personal gain. I should say, most of the time, avoiding conflicts of interest, especially in a small community, very hard to do. But avoiding personal gain is a must. And disclosing conflicts of interest is the most important aspect of this area, for sure. And we can talk more about conflicts of interest if there's desire. But really, as I mentioned, disclosure is that primary bar that we all need to meet. And then avoiding any sort of personal dealing or personal gain or perception of personal gain from your role as a board member. Duty of obedience. This has a few different facets. Obviously, the most basic level is making sure your organization is in compliance with local, state, federal laws, that it's in compliance with your own bylaws. This is a very mundane aspect of being a board member, but often one that can trip you up. So our bylaws are legal documents, and they should reflect how we're operating, and vice versa. How we're operating as a board should reflect our bylaws. If there's a mismatch there, you're opening yourself up both personally and for the organization to liability, to risk. So make sure that as a board member, you understand your bylaws, and that you feel like the way you are operating is reflected in the bylaws, and that you're in compliance with those. And then we've already mentioned compliance with the mission, but going back to that. The fourth kind of main responsibility I threw out here applies if you have staff members, but the board's primary responsibility when it comes to staff is hiring, evaluating, supporting, hopefully not, but maybe firing the executive director, and making sure that they have what they need to manage the day-to-day execution of the organization. Any other thoughts on sort of these base level responsibilities from you all, or any questions? I would say that the legal aspects of your responsibilities as fiduciary sort of drive the need for every single organization to have directors and officers insurance. That's one of those really basic protections that you really need to have as an organization. As the closest thing there is to an owner of a nonprofit, you are personally liable for acts of negligence or operating outside of the law. Directors and officers insurance will help to shield you from that liability. So just a really important note, make sure that you have directors and officers insurance. Question, can bylaws be changed at any time? And do they need legal approval? I'm not a lawyer, just throw that out there. But yeah, so bylaws often themselves will dictate under which circumstances they can be amended. Usually it's through some sort of majority action by the board. So bylaws, it's sort of this weird cycle or circle, right? Bylaws dictate how the board should operate, but the board can change the bylaws at any time. There are certain articles within the bylaws that are required by law. However, doesn't mean that you only have to say those articles. You can have a more expansive bylaws. And I would always recommend having an attorney review your bylaws, especially if there's a question about how they're structured, or about whether or not you're in compliance. Do I have sources for directors and officers insurance? Do I have a feel for a reasonable cost? So kind of an aside, but the Community Foundation is launching Chafee Commons, which is a back of house services and supports program for local nonprofits, in which we're helping to provide services and benefits and access to discounts on certain things for our members. So part of that is access to discounted directors and officers and general liability insurance. We've partnered up with a local broker who's sort of streamlined their application process for our members. That's launching next week. So please feel free to reach out about that. I would say that in general, directors and officers insurance is pretty affordable in the realm of $500 to $800 a year, depending on a lot of different variables, but mainly your organizational size. So hopefully that answers that question. Kind of moving along, we're going to talk a little bit about personal ingredients and how these are mirrored and or complemented by organizational key ingredients or board key ingredients. Going back to the why, I can't emphasize this enough. Most of you resonate with this deeply because you're board members and you're here. But if you're a board member, you must be fully bought into the mission of the organization, right? Why does the organization exist? What does it do? You as a board member, if you're not personally bought into that, it's going to be really hard for you to be a solid board member. Another aspect of or a key ingredient for board members that I always try to champion is bring all of your personal and professional expertise to your board role. I think sometimes board members either hold back or try to create a firewall between maybe their profession and their board seat. Now, from a conflict of interest and personal gain standpoint, very good to have firewalls. However, from an expertise standpoint, really important that the organization gets to benefit from all of your life experience and all of your professional expertise. So make sure you're bringing that with you. We talked about ownership from a legal standpoint just now, but also this feeling of ownership. If you don't have a feeling of ownership over your organization, it's going to be very hard for you to do the diligence necessary for you to fulfill your legal obligation and your moral obligation for serving the community. Obviously being prepared, coming to board meetings prepared, reviewing materials, asking good questions, which requires time. And then the last one that I'll call out, and we'll talk more about this, is a personal financial contribution. So for PTOs and 501c6s, i.e. the chamber, I would love to hear your perspective on this, but for 501c3s, I will say no exceptions. Every single board member must contribute personally, financially every single year. It could be $10, there's no minimum, but if every single board member is not contributing, that does not reflect well on the organization, especially as you go after grants. Funders need to see that board members are bought in financially. So that's what I consider to be a very important key personal ingredient. Thinking about key ingredients for the group of a board, again, going back to why, going back to community as well. So this idea that we started with community needs to be centered. How does your board reflect and represent your community? I really want you to sit with that question and to actually answer it at some point. How does your board represent and reflect your community? How many community members, i.e. those that you serve, are on your board? How many community members, or how can they have a direct say in how you're serving them, in what your programs look like, in what the design of your offerings are? If there are not meaningful ways in which community can be heard and dictate how your organization should function, then that's an area of growth for your organization. So always go back to that question: how are we representing and reflecting our community? Solid officer positions and committee structures are really important. Often your bylaws have to say which officer positions you'll have and which key or standing committees you'll have. Usually the minimum committees would be executive and finance committees, but you can also name other committees in your bylaws or just have those as standing committees that are not named in your bylaws. Often officers are just a sort of generic president, vice president, treasurer, secretary. My understanding of Colorado law is that you have to have president and a secretary or treasurer. Those can be combined. And so all three, you're saying, Ashley?
Yeah, you need to have all three, but they can be filled by a single person. So you can have one person in multiple roles, but you have to have all three officer positions.
Thank you. However, there's also other creative ways that you can structure officer positions. So maybe you want to choose to have co-chairs, and maybe you want to choose to have a second vice chair, or other sort of positions within your leadership that are promoting this idea of succession, of grooming, of professional development, those types of elements. There needs to be some sort of agreed upon decision-making process. Many times, key elements of this are dictated by your bylaws, things like quorum, what kind of majorities you need to have for certain types of decisions. But there's other pieces around, how does a board actually conduct its meetings? Many boards use something akin to Robert's Rule of Order. That's not required by any means, but you need to have something that everyone agrees on about the process for which you're going to make decisions and the process under which you're going to conduct your business. And then one of the most important elements that I think almost always gets overlooked is your self-evaluation and growth strategies. How are you reflecting on the board itself and asking the question, what do we have? What are we doing really well? What are we not doing really well? How can we grow? What skill sets do we really need to attract? Maybe we have 5 lawyers, so we really don't need another lawyer, but we really need X, Y, Z, right? So what are these self-evaluation and growth strategies? And this relates back to, can every board member recite our mission verbatim and put it in their own words? Are we representing our community, and how? Rank yourselves on these things and then develop growth strategies for how you're going to improve these. We talked about preparation, but I'll just hark back on the 100% financial participation. That's a key criteria in your self-evaluation. Is every single board member contributing financially? Again, up to you if you want to put a minimum on that, but I never have, and I don't think it's necessary. A quick note on fundraising. Many board members that I've interacted with and hearing from other executive directors will say, I will sit on the board, but do not ask me to ask for money. I will not do that. And I would encourage you to gently push back on that, no matter what kind of organization you're with. If we think back to our duties, our duty of care speaks to ensuring that the organization has adequate resources to fulfill its mission. So baked into our obligation and our responsibility as board members is fundraising. It is ensuring the organization has the resources it needs. So this is core to being a board member. However, I would say we often think of fundraising in very narrow terms of sitting down with sweaty palms across the table from someone and asking them for a big check, right? That's like maybe 1% of fundraising. There's so many other ways to participate in fundraising as board members. And I would just really encourage your boards to have defined ways on an annual basis that you're asking your board members to participate in fundraising. One of them we've talked about, which is making a personal contribution. But the others are, how many conversations do you want to have about the organization? How do you want to be an ambassador this year for the organization? Maybe you want to host a house party. Maybe you want to have an ice bucket challenge, raise $20 for the organization. There are really fun ways that board members can get involved in this. It doesn't have to be that sort of making an ask. But what we do at the foundation is I have what I call an individual development plan that every single board member fills out every year. And it basically says, I plan to contribute X dollars directly. I plan to do these other things to contribute to the organization. Maybe it's introducing you to 5 of my high net worth friends, or maybe it's hosting a house party, or maybe it's, having a happy hour for my friends at the local bar, pre-COVID, post-COVID, and saying, hey, did you guys know about this organization, right? There are many different ways that folks can contribute, but ask your board members how they want to give every year, and have them write that down. And then the final little saying here that always reminds me that fundraising is a good thing and not a scary thing is that my passion for the mission should always outweigh and be greater than my fear of asking. The ask, a financial ask, a fundraising ask, is an invitation to participate. And at the end of the day, if that's the mentality that we can encourage in our board members, we're going to be more successful in our fundraising. A few nuts and bolts. We've talked about a few of these pieces. I'll call out real briefly, and I would love to hear from a 501c6 and PTO perspective if there's others that we can add to this. But for 501c3s, charitable organizations, or really anyone asking for money, there's 2 different state level registrations that you need to maintain with the Secretary of State, right? There's the generic sort of nonprofit corporation one, which is takes 5 minutes and $10 a year to maintain. And then there's a charitable solicitations registration. Oftentimes organizations forget about the second one, and technically they're out of compliance because all of us are asking for money, right? So you need to register as a charitable solicitations organization with the Secretary of State. That usually requires, well, it always requires, and I'm not super up on the first time that you can do this, but it always requires information on your financials, and it will relate directly back to your 990. So usually my fuzzy area, and Ashley, I don't know if you have any insight into this, is when the first time is that you need to register and how you fill out the form if you haven't filed a 990 yet. That's called a charitable solicitations registration, and you can find that at the Colorado Secretary of State. Talked about bylaws, vision, mission, values. All of our organizations should have a strategic plan. Does not have to be this like 50-page document that sits on a shelf. These are can be really vibrant, dynamic, living documents, but we need to have thought about where we're going and why. Financials, which we'll get to, budgets, and the bottom one there is KPIs, or key performance indicators. So this is often thought about more in the business realm, but I encourage organizations, as I've mentioned briefly before, what are the key pieces of information that will help you understand the health of your organization? I call these key performance indicators, or KPIs. And how are you getting reports on those as board members on a regular basis so that you can keep your pulse on a variety of different things? So this could be, how many donors did we have last month? How did that compare to the year before? It could be, how many folks did we serve this month in trainings? How does that compare with the last month? It could be qualitatively, it could be a testimonial every month from a program participant. So these are all different pieces of information that you as board members should be getting regularly, and you might have to help define for your staff or primary volunteers to help them understand how to get you this information. Is everyone ready for finances and financials? Yeah, okay. So the reason I take so much time on this is that for-profit businesses have it easy. Let's just be honest. Nonprofits are held to a higher standard when it comes to accounting, primarily because we don't pay taxes and we don't have to give back that tax money on the money we get. In exchange for the quote unquote free revenue that we always get to enjoy, we need to account for how we spend that money. And so at a very, very basic level, that is a very key distinction between a for-profit and a nonprofit. For-profits obviously have to operate within the law, but they pay taxes, they get 20 bucks. After they pay taxes, they could do whatever they want with that 20 bucks. No one cares. And most businesses that I've interacted with, small businesses, I should say, can't tell you where they spent that $20. But nonprofits get $20. You need to be able to say what you spent that on. And we call that fund accounting. So this is the sort of distinction. And this is one struggle that many organizations have in finding treasurers or folks that oversee the financial areas of their organization is that many treasurers come from a business or for-profit background. Even some CPAs might not have experience in nonprofits and might not truly appreciate all the quirks of fund accounting. So I just call this out to make sure that this is kind of top of mind for you all as board members. Basic idea is that there are two primary buckets that nonprofits need to track. There's funding with restrictions and there's funding without restrictions. Within each of those buckets, we can create more buckets, and we often do, but at a basic level, we have at least those two buckets that we have to keep track of. I often picture them in this way. In our without restrictions bucket, we have earned revenue. So let's say you charge a program fee. Let's say you sell a t-shirt. Let's say you offer a consulting gig that's within your mission and you charge money for that. Those are all examples of earned revenue. That money comes in, it does not have restrictions. You still need to account for how you spend it, but it does not have restrictions on how you spend it. And then contributed dollars, oftentimes individual donors will give you money without strings attached, right? They're not, most individual donations are not restricted. Some definitely are, but most are not. And then funding that comes into the with restrictions bucket often is grant funding. We can think about this as like a programmatic grant. Restrictions can either be based on time or based on purpose. You have to spend this money by this date, or you have to spend this money on this program or on this thing. And you have to be able to demonstrate to those funders and to others that you met those restrictions. So if we think about flow of money, we start to see how tracking nonprofit financials can get very confusing and requires a more keen eye and tracking than a for-profit venture. So money can come in, as we just talked about. Money that has restrictions, those restrictions need to be met. And I picture this as that release valve that's kind of there in the middle. It helps me to visualize. There are many ways to visualize this, but it helps me to visualize. I have $50 in the bank. $30 of that I have to spend on providing food for kids at lunch, right? And so once I've provided that lunch for the kids, I can get rid of that restriction on that money. Maybe the money's already out the door, or maybe I had another set of money that I spent on that. Well, that means that now I have no restrictions and I can let that money out, right? And it can go to meeting other expenses. So we always need to think about, has the restriction for our dollars been met? And if so, then we can release that money. I'm going to talk at a pretty high level about these financial statements, but these are the core three financial statements that as board members, you will often see, especially the first two. So we have an income statement, which also goes by the names of profit and loss or statement of activities. All three of those names are synonymous and can be used interchangeably. We have a balance sheet, or otherwise known as a statement of financial position. And then we have statement of cash flows. I'm not going to talk a whole lot about statement of cash flows because generally speaking, this statement is more requested by lenders or banks and less often requested by grant funders or by donors or by board members. But the really important thing to remember about financial statements is that each one of these tells a different story about what's happening in your organization. And that story is your responsibility as a board member. When you're looking at your financials, you should always be trying to think about, what story are these telling me? What story are they communicating to me? And therefore, is the organization healthy? Are we spending money appropriately? Do we have enough money? Are we going to be able to meet our bills? These are all questions that can be answered by the stories told in these financial statements. So taking them one at a time, I often think about an income statement as you have a hose that you're running water through, and you turn the hose on January 1st, and you turn it off on January 31st. A statement of activities or an income statement is going to tell you the total amount of water that moved through and where it went during that period of time. So a statement of activities has a start date, an end date, and it gives you a picture of the general places that money came from and the places that money went to during that window, right? So it's a story of what happened over time. However, it does not tell you how much money you had to start or how much money you had at the end. It just tells you the total money that came in, the total money that went out, and whatever detail you might have in your financial statements about that. So then that brings us to the balance sheet, which is a single point in time. It's taking out your camera and snapping a picture. And on that date, whatever the date of your balance sheet is, it's a picture of how your assets, your liabilities, and therefore your equity look. So assets would be how much cash do you have in the bank? How many people owe you money and how much they owe you, accounts receivable? How many people do you owe money to? And how much do you owe, accounts payable? Do you have any credit card balances? Do you have any long-term debt, right? Those are all pieces that are captured in the balance sheet. And so if we're only looking at one of these statements, if we're only looking at the profit and loss, if we're only looking at the balance sheet, we're only going to get part of the story. We're not going to understand the financial health of our organization. So if we see on the income statement that, oh my goodness, we knocked out of the park, we got $100,000 in revenue last month, and we only had $50,000 in expenses, you might be feeling really good about the organization. But then if you look at the balance sheet, what happens if you see that, oh, actually that $100,000 is a receivable. We don't have that money yet. And we only have 10 grand in the bank account and we have 15 grand in payables. All of a sudden you're like, oh my goodness, we're not in a good position at all. But you wouldn't know that if you were only looking at your income statement, right? Or if you were only looking at your balance sheet, you might think you're about to go bankrupt, but in all reality, you have a $100,000 receivable, right? So the picture is rosier than your balance sheet is saying. So these two statements are meant to work together, and you cannot understand the financial health with just one of them. Are there questions about one or all of these statements and the basic stories they tell? Okay. A quick note, when we think about accounting, there are two primary ways of presenting financial statements. There's a cash basis presentation and there's an accrual basis presentation. I say presentation because that's what it is. It's not changing the actual financial health of your organization. It's changing how that financial health is represented to you on that financial statement. So you can be looking at a profit and loss statement in accrual basis. You could also look at a profit and loss in cash basis. Same for balance sheet, same for cash flows, same for other financial statements. They can be presented as accrual basis or cash basis. For board members, 99% of the time, you want to be looking at accrual-based reports. And most of the time you are. Usually QuickBooks reports that you just pull, unless you're specifying to change that to a cash basis, it's going to show you accrual. And this is good because accrual honors the paper trail, right? It says that that $100,000 that you're showing as revenue is actually a grant letter that came in. And it's showing as revenue because you're honoring the paper. You have a commitment, but you don't have the cash yet. If you were looking at that exact same profit and loss on a cash basis, you would not see that $100,000 in revenue because it hasn't hit your bank account yet. So cash basis follows the dollars themselves when they actually land in your bank account, when they actually leave. And accrual honors the paper trail. When did you get a commitment? When did you get an invoice? Go ahead, Ashley.
How do you know which one it is? Is it just whoever prepared the sheets and you have to ask them, or is there a quick way to look at a budget report and say this looks like cash basis or this looks like accrual?
You can't know unless it says, and like every statement that you pull from QuickBooks, for example, if you're printing that to PDF or you're importing that to an Excel, it will say cash basis or accrual basis on the report somewhere, usually in tiny print. However, if financials get modified, right, by a staff member or whatever to consolidate them or whatever circumstance it might be, it might not say that. So if you're ever in doubt, definitely ask. Again, the assumption can be that it's accrual, but make sure that you ask, at least right now that you know that there's a distinction, and then it shouldn't change. The main report that you want to look at on a cash basis is your budget. And the reason that that's the case is that because it honors the cash. You don't want to budget to spend $10,000 in March if you're not going to get that $10,000 until April, right? And so therefore a cash basis report that honors when you're actually receiving dollars and when those dollars need to go out is the best way to budget. However, the best way to track the financial health of the organization is with an accrual report. Does that distinction make sense? Cool. To dive a little bit deeper on budgeting, budgets, when we think about them as a financial statement or a spreadsheet, should be the sort of tip of the iceberg. And in this case, I guess an upside down iceberg. But really, it should reflect much deeper thinking and planning and other documents. And this, from a board member's perspective, yes, you need to understand that spreadsheet of the budget, but what's more important for you is understanding how those numbers came to be and how they relate to your duties, to the mission, to your community. And so if the budget says we're going to spend $100,000 in staff, okay, that's a great number, I guess. But if you as board members need to dig deeper and understand, okay, what are they going to be working on? How many staff members does that represent? How does that relate back to our mission? How is that going to move us forward in our strategic plan? So those other documents, whether it's a strategic plan, operational plan, programmatic models, all those need to sort of get translated into that spreadsheet. And as a board member, it's important that you understand those other documents, almost more importantly than the numbers, right? If you trust that there's adequate capacity from a staffing standpoint to implement the programs and raise the money, then the actual dollars and cents are a little bit less important if you trust and understand the process that they use to get to those numbers. So just make sure that from a budgeting perspective and a board that you're asking the questions that relate back to the planning behind the spreadsheets. I'll end on board reporting. I've mentioned this a few times, but in my opinion, it's really important for boards to develop and use a dashboard of some sort. You might be used to getting your full financials and spreadsheets, and it's important that you do get those and have access to those as a board member. However, it's also really important that you ask your staff or primary volunteers to create summaries, a summary dashboard. And for me, what this looks like is that every single month, my board has asked me to present the same pieces of information so that they can get a consistent pulse check. I'm also providing them the full financials, in-depth program reports, those types of pieces. But it's that one-page dashboard that says number of donors this year versus last year, amount of revenue up or down, fund balances. Ours are mostly quantitative, but it's also, there could also be qualitative reports in your KPIs. So what is that one-page dashboard that might consist of 5 to 8 pieces of information? What are those 5 to 8 pieces of information that you as a board member want to just be able to see in one page every month? That's what a dashboard should be. And that's what I think should be at the top of your board packet every month, is that dashboard, to really give you a gut check, a pulse check of the organization from those few different criteria. So I'm going to stop there. Please know that Colorado Secretary of State's website has an online do-it-your-own time and your own pace board training that you can do. If you Google Colorado Secretary of State nonprofit board training, it will come up. It will lead you through, very in-depth amount of content. It will probably take about 20 hours total. Again, you can do that on your own time. but it's much more information than I presented here and goes deeper into this stuff. So that's a great resource for board members. I will open it up for questions, comments, discussion.
Hi, this is Anne. I'd like to know if you've got any ideas about how you attract, recruit new board members. The 2 boards that I've been involved in, we've had a lot of people leave, and we're having trouble. Another one is having difficulty finding a treasurer. So if you have any thoughts, I'd like to hear them. Thank you.
Yeah, thanks for the question. That's actually, I don't have a silver bullet or a great answer. That question is why we started doing these trainings in the first place, in the hopes that folks that are not currently serving on boards but are interested in doing so would start to attend, get a little bit of training, base level understanding, and then we could start connecting those folks with nonprofits that need board members. It's something that's very much on the Community Foundation's radar. Part of our work over the next month is going to be launching a county-wide volunteer portal in which we'll be able to offer our organizations the chance to elevate opportunities they have. And we're hoping through concerted and consistent messaging, promotion, advertising, marketing, that community members will start to use that as a resource for finding ways to plug in. And that could be anything from getting your hands dirty with manual labor to board positions, advisory committee positions, and others. So it's something that we're working on, and I would love ideas. If you all have them, I can take them and run with them on how to do better at that. Sorry.
Are you a member of the Colorado Nonprofit Association?
Yes, we are.
Okay, because I did a seminar like this last year, and I'm just, I live in Denver, but I'm living here for the last year because of COVID in the mountains, and I'm just curious about what's going on here. So thank you very much for what you've been talking about today. It's been helpful.
Absolutely. Are there other questions or thoughts?
Joseph, can you hear me okay?
Yeah.
Amber, wow, you are a wealth of knowledge on this. Thank you so much. That was way more than I thought I would get out of this. I loved your well-rounded approach to this. It wasn't just like I can tell that you're not a just check it off the list kind of guy, and you really took a wholesome look at this, which is just so cool. So thank you. I as I mentioned, just being part of my, like the PTO, when I got there, they were overdrawing their checking account. They had let the 501c3 status lapse, like all these things that are no one's fault. It's a volunteer organization. And when you just don't know what you don't know, but it's been and as a business owner, I was happy to take on the finances, but even after keeping books for our business for 15 years, you're exactly right. It is totally different. And the accountant's asking me questions of like, I just thought revenue was revenue. It's like, no, that's not the case. And so anyway, I have had a lot of hard knocks trying to help get this back on track, but just thank you. You've given me so many notes to kind of look through and whatnot. So I just really appreciate you doing this today.
Thank you, Amber, very much for the kind words, and I appreciate you being here. And yeah, invite. Part of the idea is that we do this same training every 2 months. So you can find the other times on our website. If there's others that are serving on your boards that you would like to have participate in this, please point them to our website. In addition, for local organizations, we do offer pro bono sort of facilitation and kind of consulting or board development work. We generally confine that to, at least on the pro bono side, to about 3 hours of dedicated work or facilitation for meetings. Anything from strategic planning to vision, mission, values, definitions, to all those types of pieces. So if that would be of help to your organizations, please let me know, and we can work on arranging that.
Yeah, that's awesome. And I love, love, love the idea of a Chaffey County Volunteer Opportunity Board. You know, we have a lot of staff members who would be interested in that as well. And you know, as this is the first board I've ever sat on, and I'm scared to ask Anne what board she needs a treasurer for, of like, you know, I'm not just, you know, the commitment, right, is always so scary, but I'm definitely interested in learning more and serving on other boards at some point. So I love that you put that up to do the volunteer opportunity board. It's a great idea.
Well, you should see more information from us in the next month about that launch. It's called Via Chaffey, viachafey.org, Volunteers in Action. And you can go to the website right now. It's not built out or finished, but it will be coming. So Ashley, did you want to jump in with a question?
You know, I was just curious if in the fundraising piece, and I can answer your question, you mentioned the 501c6, at least for the BV Chamber, we all are members, are paying members of the organization. Makes a lot of sense to me that would be a good way to represent your commitment as a board member. But I was curious in our role as for nonprofits generally as fundraisers, how you see the balance between like the tactile benefits of like a tax deductible donation versus like just the heartstring contribution of a donor contributing to an organization that's with an important mission. Do you see the tax deductible status as important to people generally, or is it more just about the opportunity to support a mission that matters to them?
I would welcome other perspectives on this from the rest of you. My 2 cents is that it's a blend. It depends. In general, this is not always true, but in general, lower dollar amount gifts and givers would generally tend to care less about tax deduction, especially with the current tax code. If you're seeking major gifts, it will definitely matter. So in my opinion, major gifts would be anything more than $1,000, but that could vary depending on your organization. Generally, those larger gifts and larger donors will want to understand that they can get tax benefit from their gifts. That being said, though, I think there's an inherent trust piece that donors, whether or not they actually care about the tax deduction, saying your gift is tax deductible and we're a 501c3 charitable organization, it sort of creates a base layer of trust with a donor. If that's not mentioned, or if it's not the case, there's just more questions. And as you all can know, the more questions somebody has, the more work it's going to take to cultivate a gift. So I don't think it's definitely not a requirement for all donors. It helps. I would also say the reverse. I would also say that if somebody's really jazzed about your work and your mission, just because you're a 501c6 is not going to deter them, or just because you're a 501c3 is not going to make them give, right?
Right.
So I think it goes back to some of those fundraising best practices in general, and tax deduction can be sort of that one less barrier aspect.
Okay, really helpful. Thank you. I agree with what was said. This was a really helpful presentation. Thanks for putting so much thought into it.
Cool. Along those lines, if any of you have thoughts as you think back to the presentation over the next few days about ways that I can improve it or additional information that'd be helpful, please let me know. I mean, I do this regularly, so I'm happy to always looking for ways to improve it and to make it more meaningful. So thank you all very much for your time. If there's nothing else, then I'll let you have the rest of your evening back.
Thanks, Joseph.
Thank
We
you.
appreciate it.
Thanks so much.
Thank you.
Thanks.